Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, December 15th, 2021. It's 11:14 a.m. as I'm starting the video. What I'm going to do in this video is everything but the stock market. I've been doing stepped up more frequent updates on the stock market, equity indexes because of the recent sell signals we've had and everything else, all the other developments. So I've covered those extensively. We're going to skip that in this video, and I'll give you an update on just about everything else that I've been highlighting recently. And all the other, not individual stocks. The video would go too long, so we're going to focus on the other asset classes, and that will be gold, silver, precious metals, platinum, palladium. In there I usually cover the euro US dollar as well, so we'll start there. Precious metals. Then we'll roll into the ag commodities, the ones that I've highlighted recently, as well as a new trade idea for you on wheat. So we have sugar, corn, wheat, coffee, and then finally an update on crude oil, and I think that's about it. So let's start there. We'll see how the video goes. And if there's anything else I want to add, I'll probably do a follow-up video. Again, before I get started, remember today, FOMC announcement at 2 p.m., press conference at 2:30 with the potential to move the markets. Powell, after being stubborn with his transitory inflation thing for way too long, has finally realized he's behind the curve. So we'll see just how much he backpedals today. And again, it's not about what he says or does, it's how the market reacts. And it's also not what the market does at exactly 2 p.m., 2:30, even into today. But the technicals are what they are. Not that they're immutable. They can change. We can run up. But again, let's not even get into that. I've given you my thoughts where I think the market's going. I still have downside targets that I think will be hit. And if something happens after the Fed meeting or otherwise in the next in the coming days, I'll let you know if I change my outlook there. So again, keep it light if you're not, if you're somewhat risk averse, because we'll probably see some volatility, and that may also affect these precious metals, obviously, because what Powell says and what the Fed does will have an impact on the dollar. So, and these are starting out here with the precious metals, which are very much so dollar-sensitive assets. So we'll start out with gold, GC gold, gold futures. Its trend line's kind of been traded through quite a bit. We had, two reactions, one here, and we had one there, but then we've kind of chopped through it. So the trend line is questionable as far as validity, since we don't have distinct reactions. But what we do have here is some decent, not huge, but decent support right here on this 2-hour chart. Now I'm going to show you the daily chart in a second on GLD. We are at more significant support there. But when I look at this chart that goes back 6 months, you can see enough reactions in this support zone that runs about 1751 to 1763. Oops, didn't mean to make that go away. Let's try that. Let's go back to gold, GC. And so my outlook has not changed. Gold is just doing its thing. It's been moving sideways for a while, for months now, not really going up, not really going down either, just sideways, as you can see, for the last 6 months at least. And we're towards the bottom of the trading range. So I still like it. You can see right here we had, as pointed out back here, we had a bullish falling wedge, positive divergence. We broke it, but didn't really take off. But we're just right back to where we started, back to that previous low. And any low, let's say there's a knee-jerk reaction for whatever the Fed does. Keep in mind, the more hawkish they are with rates, then typically that should be more bullish for the dollar. When your country, the U.S., if we're going to raise rates, that's going to be net bullish for the U.S. dollar. But of course, remember, there's the ECB and what they say and do. So again, just let's watch it here. And there it is. So support. And if we make another marginal new low that's not too much lower, let's say something like this or this, you can see here I just extended the divergence line. So no way, shape, or form is gold going to take out these divergences that are in place right now unless it really moves down here. And that's possible, and we'll watch it, and it changes a technical outlook. Now let me flip over to the daily chart and show you what I see there. Let's see here. Let's go to GLD. Okay, so forever and a day we've been in this correction mode, what I believe to be a longer term bull market in gold. I've been bullish since back here. It bottomed. The official bottom was back in late 2015. The miners bottom in January 2016 to the left of this chart, in the daily chart, and we've been a bull market. It took a while. We came off the lows, consolidated for a couple years, then broke that range. That was a big breakout right there. Above that, we moved up, and then back here, when we hit long-term resistance on my weekly chart right here, that's when I said, hey, time for me to get out of my long-term positions, trend positions, probably looking at a decent correction in gold. So that's that. But after that, we hit my downside target buy zone, and that's right here. Again, this is kind of a recap. I've covered this in the past quite a bit. We had this buy zone here, and we hit it there. The top is, remember, moderate support, and the bottom is solid support. We hit the top there. We hit the bottom, bottom again, top, bounced, almost to the bottom. We're back to the top. So again, this is big support for me in gold, and gold remains in a bull market, obviously in a corrective phase within that larger bull market, and as long as it keeps pulling back to this buy zone, the top or the bottom, that's where I think it's objective for longer term traders to take positions in gold. You have a downtrend line here that will be really helpful to see that break out above that. If and when we take out that downtrend line, you want to look for a break of these previous major reaction highs right here, here, and if and as each one of those is taken out, that's going to give you a check mark and tell you gold is most likely off to the races on the next leg up. But now on the flip side, we go much below that buy zone. Anything more than a little whipsaw or brief breakdown for maybe a few days, couple weeks, and back up, anything much more than that, that's going to be bearish. That's big support. They've been defending that for a while. So there we are. In summary, we are at the top of that buy zone on the daily chart. I have an update. I just flipped to the 60-minute chart on GLD. I'm usually looking at the futures, but you can see gold's, it's not perfect support. It's been in a choppy, grindy range, and there's certainly been swing trades to be made, but there it is. Support. Any new low, a dip below that support right here, give you that line, is just going to look like this anytime soon. Unless it goes much lower, you're going to have positive divergence on the 60-minute chart, just like we did right here, and we got that rally, just like we did right here, and we got that rally. So I like gold, folks. And next up, silver. Silver is at, this is the future 6-month chart, 2-hour candles. We have this key reaction low here from back in, what was that, late September, early, about the beginning of October down here. We had positive divergence, aka bullish divergence. We also had a bullish falling wedge. We broke out, we caught that one, traded it up, and then everything, like quite often is the case, came full circle. Positive divergence, rally. Up to that point, and at that point we had negative divergence right here at the high, and that led to this drop, and now we've come full circle. We have positive divergence. Indicators are still pointing lower, so I will say it's a catch a falling knife trade, but so normally I wouldn't just take a shot at silver if it's going down without any support, but when something falls to a key reaction level, even if it, again, Fed's up on deck today, you're going to see some volatility in the metals and the currencies. So if it whipped down and you don't want to take that breakdown, anticipating that it'll be a false breakdown, wait for a recovery back above 21,484. Call it 2148. But I will say we've fallen to support with bullish divergences, and I'll be very clear. I think it's an objective long entry here. Again, if you're risk adverse and you want to wait till the Fed's out of the way, fine. There might be a big drop. There could be a big rally afterwards. You might not get such an objective entry, so that's up to you. But I guess the takeaway would be, if you're going to step in here and buy, go kind of light right now. You can wait till the announcement's over, but don't run a tight stop because you're likely to get stopped out in the noise. I like to kind of suspend stops, usually heading into a potentially market-moving FOMC meeting. Not all of them are market-moving. A lot of them, you know exactly what the Fed's going to do and say. They made a big effort in recent years to be very transparent, and overly transparent, in my opinion. Now he's got Powell and the Fed's in the process of walking back their whole, we're not worried about inflation thing, it's transitory. So we'll see exactly what they say and do today. There it is. Bottom line, silver at support. And for you that those of you that don't trade the futures, you can do SLV, you can do the miners. SLV is also at really good support here. I'll turn off all the lines. I'll show you what we're talking about. Just box it in right there. Again, back here, that's when gold peaked, and that's when I said, time to either short or get out of the long-term positions. Probably looking at a sizable correction, and that's all it's been. It's been a multi-year now consolidation. That was back in 2020, the middle of 2020, and we've been moving sideways in silver since then. But you can see it's good support right here on the bottom. This is where, for years, of last almost 2 years now, nearly 2 years, that's where the buyers have stepped in before. So like I said, if we go much below there, that's not good. Market's full of whipsaws. You could allow for a little bit of whipsaw down through there, a little bit of a move. It all depends on what you're shooting for. If you're shooting for the next leg up in silver and you've been buying these dips and positioning, holding out, you can give it more room. If you're trading, the bull market trade, you can see it here from a long-term perspective too. We put in that big positive divergent low back here. Been moving higher, and there's that good support we're at right now, give or take about 20.70 right there. Call it $20 because we're a little bit below that right now. Again, I just showed you on the daily chart we've had a couple spikes down through there, so that's what it looks like there. Next up is Palladium. We're looking at on this chart here, PALL. That's a continuous contract of futures. You can see all the big moves in recent years, all measured out here and shown on this chart. Look for these divergent lows. We had a divergent high there, correction, divergent low rally. You can see all the divergences, and then and also, like I mentioned down here, bottoms are usually follow extreme overbought readings. And you can see right now we're not extreme, but we just double tapped the that overbought reading right there. I'm sorry, oversold. That should say oversold. Overbought is up top here. Typically 70, but you can see with Palladium that it usually gets up there a lot higher, closer to 85, 90. But on the pullbacks, again, if something I talk about all the time. When a security, whether it's a stock index, an individual stock, commodity, when it's in a bull trend, usually pullbacks to support, or pullbacks to the oversold level around 30 are very fleeting and also not as deep. When you're in a bear market like you were right here, this is a bear trend, oversold can and often does become more oversold, meaning you cross down below 30, and also often stays oversold. You get more of these persistent oversold readings, repeat tags after bouncing a little bit. That's bear market action. But then in a bull market, overbought tends to become more overbought and stay overbought for an extended period of time, right? So looking at this chart, all I can say is that we're in a larger bull market right here. Since this point here, we bottom and we've been moving up. Kind of got mixed feelings on Palladium because if you guys recall, back on August 31st, I put it on as a short trade and gave you a long-term target down here. That's for 1100 is my long-term target, and we're still got a way to go. And that was, gosh, where is August 31st? Would have been October, July, August. You're not far off the top. And when we went down, we caught this bounce here. It doesn't look like much when we zoom out. We're looking at, this is a weekly chart. We're going all the way back to 2001. So keep in mind that's a big, the scope of those moves are very large. So right here, then I posted covering that short and going long for a bounce, and we got that. We got like, I think it was 20%. We gamed that counter trend bounce, and then I said, back in, and we'll continue down. So, okay, where am I going with this? I know that's confusing. I kind of mesh active trading, or at least swing trading, with long-term tradings. I do believe there's a good chance we can go down there. However, we're probably going to bounce again. That's what I'm trying to say. So I am longer-term bearish, near-term bullish on Palladium. That's the easiest way for me to put it right now. It's not screamingly bullish, but right now we can make the case. And look, maybe we never get to that downside target of 1100. Remember, commodities are in a bull market, and you can also add a trend line right here we're at. So you have a case, 1, 2, potentially 3 reactions if we get a reaction here. You have a double tap of the oversold level right there. We're at 29 or so. This is an end of day chart, by the way. It just shows prices as of yesterday's close. But now what I like to do is zoom down and take a look at the near term chart. So this is PA, Palladium, same thing, Palladium futures, 6-month chart. And what I have here is what I call, again, unconfirmed positive divergence. Unconfirmed because these are momentum indicators. You have the RSI and you have the PPO. This PPO is headed down, and it could keep going down. And if it does go down much more, you're not going to have any divergence. But as of now, you have potential divergence, just like you had positive divergence there, and you got a nice tradable rally. Just like you then had negative divergence there, you even had small divergence there, you got a correction. So that's what we're looking at here. What would be a target if we do bounce? You want to step in here, right here, back to about 773, and then the downtrend line. Those would be potential targets. Max target at this point in time would be about 2140. But let's just right now, let me add one more level, and I'll tell you this is my current preferred target right here, about 1885. And if this plays out the way I think it might for another counter trend rally, that's going to come in with the trend line. It should work like something like this and then come in together, the downtrend line in 1884 roughly. How much is that? If you step in and buy it today, you're good for about a 20+% rally if that target's hit. So there's the idea. It is an aggressive, somewhat catch a falling knife trade, but again, I showed you a couple of reasons on the long-term chart that you may take in, step in here, maybe a starter position, maybe wait till the Fed's out of the way. That's up to you. I took a starter position, right before the video today, and I with room to add to it if I like what I see, and if I don't like what I see, I'll let it go. Okay, last but not least, for those that don't trade futures, you have PALL. That's your ETF, the go-to ETF that I would suggest using if you don't trade futures. You have the potential but unconfirmed divergence on the daily time frame here. Nice, again, potential because I want to see this PPO cross back over and effectively put in a higher low with prices making a lower low. You're also coming right down towards that major reaction low when COVID hit. Everybody didn't know what to do, which way to run. You can see that people freaked out. Panic. There was a lot of forced selling, margin call selling and everything when the markets dropped. And then everybody realized, hey, that was overdone. Let's be long Palladium. And it had its run. And again, so didn't nail the top, but nailed it right here. Short entry in that video. Swung it down to here. And then I posted when we were right here for that long trade, which we gamed. And again, it's big. Palladium really moves a lot more than gold in percentage terms. So we were able to sidestep that give back and then get back into the short, and there we are. And also look at this. After that drop, after we hit that target on Palladium for the upside, we had an impulsive leg down. That's a flagpole, a bearish pennant right there, our bear flag pattern, and then a move down, which pretty much came close or has come close to the measured target. The measured target is the distance of the flagpole added to the top of the flag, and so we've met that measured projection as well. So that's one other reason you might want to step in or maybe take a partial position and then add to it if it stabilizes. Because like I said, it is a catch a falling knife trade right now. You can see we're in an impulsive move down, and there could be a little more in that flagpole yet to play out still. So kind of throwing that one out with a little caution. All right, we got to move on. Got quite a bit to cover. PPLT, let's move on to platinum. Platinum also looks good. This one I also took a starter position in today. You're at support, $84 support. You have 1-2 reactions there. You had quite a few reactions from below there. There was a little trading range right here. Then you had reactions from above during this trading range right here. And you had some reactions back there, and there's a little flag. There's another example of a bear flag, impulsive move down, flagging action, and a boom, bigger drop. So anyways, we're at support now with potential, unconfirmed but potential positive divergence right here. And even if we go a little bit lower, that divergence will be in place. PPO, it would be really help to see this PPO curl up, which it will be if we can defend this level right here. But don't get married to it. Like any trade, don't get married to it. Look at how I draw the flag here, and you have more downside. Remember, this is an ETF. It's going to do a good job, but not a perfect job of tracking the underlying but that's platinum. And then if you want to trade futures, PL are your platinum futures. PA were palladium futures. PL is platinum. This is what my chart looks like right here. This is a 6-month, 2-hour candlestick chart. You had a primary downtrend line coming in from back here. In fact, if you guys remember, just about a week or two ago, I pointed out a kind of a meh scenario. I said, look, it's a breakout. You could go long here. We broke out, back tested this bullish falling wedge. We had at the time positive divergence, and it started to run. But I said, look, if it comes down here, I'd like it even better. I could see it coming down to test this previous low. I was again kind of meh on that trade at the time, and now this is where I like it, because we have that divergence has gotten even larger. You had that last leg down. I think it probably shook out some weak-handed longs, and that could set the stage for a nice pop here. I'll have to revise some target. Let me add one more target here because I haven't updated this chart since then. Yeah, I'd shoot for, you want to be conservative, go for that this reaction high right here. It's about 948, 950, or that other one. But I think we can swing back up here in this range. I think it's good for at least a bounce trade right now, again with this 60-minute divergence and possibly more. These are all potential targets all the way up to about 1028. So I'll do an update after the Fed's out of the way. It might take until early next week, and traders know which direction they figured out where they want to be with the dollar and the euro and these metals. Then I'll give you an update there, and I'll follow up and maybe make some revisions to any targets, or tell you, hey, they looked good last week, but they're not looking good now. I'll let you know. Turn around, walk away, move on to the next one. And US dollar futures DX, this is what it looks like on the with 2-hour candles. You have a primary trend line here. You put in a divergent high recently, bearish rising wedge as well with negative divergence. We had a sell signal right here, as I mentioned recently, right there, broke down, and we've been kind of grinding around sideways. We're still below the breakdown level, right about back to where we broke down. I'm going to put a resistance line here, and but these charts would indicate to me more downside, because again, we fired a sell signal on that breakdown and that divergent high. So what we need to see is this uptrend line get taken out right here, and my next target's 95.56 right there. Actually, we already hit it once, so expect we come on down. I still think we're going to come down here to at least that 94.60 level right there. And you have intersecting uptrend line support. That trend line actually generates from the left of this chart. It's a longer term trend line with a few reactions since, and price support as well. So if this scenario plays out, even if there's a marginal new high in the dollar, it's going to be a divergent high still anytime soon. Again, a keyword being marginal. You know, if we go up 10-20%, that divergence is burned out. If we go up marginally and then pull back, come back in, that's going to give us bigger divergence, and I'll still maintain at least that target. Now, if that level's broken, you know, we're going to probably have even a deeper drop in the dollar. And again, gold and silver, they trade inversely to the US dollar because they're priced in dollars. It's simple stuff. Dollar goes down, the dollar index drops. It's going to take more dollars to buy an ounce of gold. Therefore, gold goes up in price. All other things being equal, that is. That is, if you freeze supply and demand, the impact of the dollar is direct and absolute like that. And likewise, dollar rallies and goes up, let's say 10% over a period of time. Well, the dollar is stronger. It takes fewer dollars to buy an ounce of gold, and that's how that works. Okay, and sugar's starting to look sweet as far as a trade. That one never gets old. Right here, it was mentioned as a short trade recently. A couple reasons, including but not limited to overbought right here. I showed you the history. When you get to about overbought on the default on most charting programs is a 70 level. That's where they put a line, but I take those lines off because every security is different. You try to short or get out of sugar every time the RSI gets 70, well, you left a lot of meat on the table if you were long, and you went underwater if you were short. So what you want to do is look for an extreme, which is about 86.275. That's the magic number. Has been at least for many months. This is a 6-month history, and as I mentioned before, that's where usually you see sugar to top. In addition, I have these sell signals. I just look. It's the simplest one I've seen on the PPO. You look for these high-level bearish PPO crossovers. The red lines show it all, and you can see what happened each and every time. Those are sell signals. So there was a lot of that, plus a push into resistance. So bottom line, we're already down, profitable by over 3%, and probably 4 now. I put the line here before I did the video, but we continue to fall. So it's better than a 3% drop off that recent sell signal. Still coming down, but what I wanted to let you know is I revised this. I had before given you a sold target down here. Again, these are unadjusted targets. That's the actual support level. You're probably going to get a reaction, so you want to cover a little shy, a little above the actual support levels on these charts when I refer to it as an unadjusted target. So that's 0.1845. That was the former T1, but I gave you another one here for those that want to take the quick buck. You'd probably be good for about, I don't know, 5-6% gain at least, which is nice if you're trading futures. You know that. If you're using SGG or CANE, those are the ETNs for sugar. What you do is you just take a bigger position. You know, sugar's not going to move like Bitcoin or natural gas, so you can have a larger position size and make it worthwhile swing trading a 5, 6, 7, 8% swing trade on that. And so that's it. And I wanted to just say we had, well, as of this morning, it was about another 5% downside to that, which is still my final target. Before it was a sold target. I gave you 2 targets now, and I still think we'll move down there, and that's 0.1845 right there. And this is what it looks like on SGG. Here's your uptrend line breakdown. We hit that support recently, 55.66. Bounce, back tested, and we're starting to move lower. And then Cane, I have a little different variation of the trend line on Cane. We're above it, but we'll probably come back down to that trend line right here, that uptrend line. But also remember, pretty big divergence in there. So you could have, this is a trade, and I want to bring this up on all these commodities. This one and a lot of these commodities could prove to have a lot more downsides. I gave you some pretty shallow targets on sugar, but let's see what the Fed does, because I think at this point, I think it's becoming clear they're going to have to put the brakes on this inflation. Inflation is out of control. We're at almost 40-year highs on inflation. We just had last month, I think, was it month over month or was it year over year, the biggest increase in the PPI, the producer price index. That is, CPI is what we talk about, inflation, consumer price index, what we're paying, you and I, for housing, oil, food, and then PPI, that's producer price index. That's where wholesale goods, producers selling to the retailers. And so that was one of the big, it was, I believe, the single biggest increase ever. And so inflation is, the cat's out of the bag. And well, okay, where am I going with this? Well, it's helped us. I've been bullish on commodities for, since we bought them back here. And but Powell, the Fed, and DC, believe me, Washington wants to see the brakes go on that inflation trade, or things are going to get ugly. So they might, depending on what they do, might let a little hot air out of a lot of these commodities. So again, we've been in more swing trading mode recently. I've kind of warned about divergences and things on a lot of these commodities and the big run-ups. And it's kind of, I've been in hit and run mode, as I've talked about for a while. That means swing trade, get in, get out, few days, few weeks, move on to the next one, or wait for the next setup. So the takeaway here is on a lot of these, you can set stops if you're profitable and let your trade run. There might be more downside, and I'll certainly let you know when I think it's time to re-enter for a long-term position in any of these. But as of this point in time, yeah, we're looking, there could be quite a bit more downside coming. All right, next up, we're almost done, guys. Corn, let's do that. That's ZC. Corn's been stubborn lately. It was, gosh, if I remember right, I believe it was first mentioned as a short back here. We had a bearish rising wedge on the 60-minute chart. We had divergence just on the PPO there, got a sell signal, and it went down and hit this level here, 553, bounced, put in, again, here's an example of a marginal new high, just slightly above the previous high, but all the while the divergence, we had divergence already going on the PPO, it got even larger and larger and larger, and then boom, then we had a secondary sell signal right there. And again, same thing. This one's actually almost an equal high So it really extends, it keeps that divergence going, it continues to build, and you can look at it two ways. You can extend it from that point back here, or you can say, look, we have divergence right here as well. Either way, you cannot argue that the sellers don't keep stepping in right here. That's what's happening. So that level, the recent highs, put a line there, is about 597 300 on corn futures. And you have, I'm going to add one more level here for you. You have some decent support right here in the last few days, as well as back there. So about 581. I think a break below 581, 500 will do the trick. I think we've already topped. I think you can continue to short pushbacks to this level. We have the divergence. I maintain this target down here. I think we're coming up back to 553 at least. And it'll work like this. If we take out that 581, 500, should take us down to that 571.5 level there. And then when that goes 553. So that would be in a nice rejection. Look at how the sellers stepped in hard and aggressively today at that high. Look at that big drop. So and potentially more. Again, you can just, if you want to go for that, what I call a runner trade instead of just quick swing trading, if you get profitable on it, lower your stops along the way as it goes down. Give it a little room for kickback rallies, and hold out for more. I'll continue to update these as long as these trades work out. And next one, wheat. Let's look at wheat. Wheat's interesting. I haven't covered that in a little while. So there's a potential new setup in wheat here today. ZW is wheat futures. You know what? Before I do that, shame on me. I need to give you the ETF on corn for those that don't trade futures. That's what it looks like here on the daily chart. CORN, easy to remember. You had that little 60-minute rising wedge breakdown there. First support right here, target's 2064, and I think we'll come down probably at least at 1917 level, and so that would be a drop of about another 10% plus in corn. And if things get ugly, we might take it all the way back here to 1744, and that would be about 20% drop, 19% or so. So that's corn. All right, now back to wheat. Go back to the futures where I just had that up a second ago. Let me cue that chart up. Where is it? Here it is. ZW. You have this potential divergence forming, but we've had it for a while and it keep burning through. We had divergence here. I've been watching this one, waiting. I was going to mention it the other day as a setup on the break below the trend line, and I forgot to cover it in that last video, and we broke it today. So it is a sell signal. That's I wanted to bring it up. That's boom. There's a breakdown. This is a pretty decent trend line. 1, 2, 3, 4. And then 5 reactions on the trend line breakdown. Target 733, 295 unadjusted target, and I think it'll continue down here to at least 697, 26 ish. Ideally, you want to see this divergence burn through. That's the one thing giving me a little hesitation, because if that divergence plays out, at least you're probably going to get a back test of the trend line. But so here's the thing: short it, and if it recovers the trend line, stop out. Otherwise, I think it can head on down there. Again, that's the 2-hour candle chart. We look at the hourly candlesticks right here. This is what it looks like. It's been moving lower. The divergence is continuing to build, but it could burn through. And based on the fact we had that sell signal there, the break of that primary trend line, that's where I think it could head lower. And let me show you the chart of wheat future or wheat ETN. And that's WEAT. So this is why I think there's more downside, and those divergences might get burned through. That was a pretty decent trend line there, and look at that big divergent high. I mean, we've had a nice run in this one. We've had multiple trades on wheat over the years, mostly long side trades, but every now and then you get these divergences on the daily chart, even in a bullish uptrend, and you get pretty good corrections. You don't want to be I don't want to be long. I'd rather be short wheat after divergent highs and a big run up. Right there, divergent high, correction. Right here, divergent high, correction. Right here, big divergent high. And we even had a divergent high there, correction. So that's the story on wheat. And here's my target, $7 and the uptrend line. That is, wish I would have started with this one for you, because it's fallen quite a bit since where it was earlier this morning before I started the video. But that's still another better than 5% downside left in wheat. Okay, almost done. Just coffee and crude oil, and then we're finished here. This is coffee KC, like KC in the Sunshine Band. That's your ticker for the futures. You have a uptrend line right here. Actually, I have that one should, well, I'll call them parallel trend lines right there, which could trigger a deeper sell signal if hit. And we're coming off a divergent high. That's a concern here. Right there, you had negative divergence, right? Divergent high, pretty healthy correction. With small divergence, but enough to send coffee futures back pretty hard. And right here, we recently put in a divergent high. We had divergent high 1 right here, divergent high number 2 right here. The divergence extended. Little minor trend line break set us down here. And now I need to see this level go. I think it will. That's going to be a next sell signal. It'll take us down. And let me create this, replicate this trend line here. It's having a hard time grabbing it, so I'm just going to draw another one. There's our parallel trend line like that. Something's not working. Here we go. There, it's starting to move. All right, so that should come down together. I think we'll come on down here and hit that 21. 2.1793 is the support roughly, and that's a 6-month period chart. Again, negative divergence. And then if you want to trade an ETN, JO, and there's the uptrend line right there, same target. I target this trend line right here, big divergent high. And again, this divergent high, what I think will happen, look, based on the scope of these divergences, is come on down here. So you've got a swing trade of about almost anywhere minimum 8%, somewhere, let's just say 8% right now. Let's just say this trend line here, if I can move that sucker, there we go. There's your trend line, and we'll probably have a reaction because there's nice price support there. So I'd swing it down there, game a bounce, but don't fall in love with it, because if it breaks that, it's going to keep going down. But I think we'll probably get another thrust up within this wedge, and then possibly later on breakdown based on that divergence. Either way, I'm going to be clear. I think the next 8% move on this one's to the downside. So that's another trade idea for you. And crude oil, I remain bearish, looking for more downside. This is my long-term chart of WTIC, which are crude futures. Big support back here years ago, which was broken, leading to a waterfall sell-off. Big move. We got rejected there back in 2018. We got rejected there again here this year on the first attempt. Had a breakout above it, but as I suspected and mentioned at the time, even before it happened, any breakout would likely prove to be a false breakout, and that's what it was. So that was a what we call bull trap, aka failed breakout. Bulls buy the breakout above major resistance, but when it fails, that's very bearish. And so we had a big drop, 20-something%, I believe, in crude, and a little kickback rally, which looks to be flagging. I know you probably can't see that on there very well in the video. I'm sorry, I can't zoom this chart in, but it's a snapback rally, and it looks to be bear flagging on this daily chart, and that should take us down to my target right there of about 55. Using this one to kind of hone in entries and exits. This is the 6-month chart, 2-hour candles of crude futures. And so there was that divergent high. There was our major sell signal right there that we had on the trend line break. And let me call that a breakdown back test, or I'm sorry, breakdown right here. Back test 1, back test 2, and double or even triple top high. Rejection, failed to get over that level. And that's all she wrote. It's been moving lower since. That is a downtrend. And then most recently, we put in this little small, it's all it takes usually in a downtrend, small divergent high. Just like in a bullish trend, a small divergent low is usually the trick, for the catalyst to the new highs. But in a bear trend, divergent high, it doesn't have to be very big. That's probably going to take us down to the next leg down. Could run. Here's a potential trend line to watch. Now, what does that mean? It means two things. If you're bullish, you want to break above the trend line. Maybe you want to go long. I would wait to see a solid break over 73 and the trend line. And by the way, remember I gave you back here, I laid out when we had this positive divergent low, I gave you 2 bounce targets. Right here, a minimum target, which was hit very quickly on that first pop, and then a max bounce target, which is what we went to. It was a target zone about 72. We went a little bit higher. We went to 73. My target zone was 71.20 to 72, and so that's good enough. And that's that means back short for the next leg down. And again, those are your levels to watch. Okie dokie, guys. Long video, but just under 40 minutes, and I covered a lot of stuff. So, all right, we have another couple hours to go until the FOMC announcement, and I will most certainly do an update on the stock market as well at the end of the day. My thing is diversity is just as important in active trading, in my opinion, as it is in investing. In other words, your 401k should be diversified. That means different stocks within your equity portion, different asset classes, depending at the time, stocks, bonds, commodities, precious metals. In the same thing when you're trading. I mean, some people will focus on, and there are times I'll hyper focus on a certain, futures contract or stock, and I'll day trade that. But again, it's never 100% of my portfolio, and I don't think it should be of yours either. All right, we'll wrap it up here. This is Randy Finney with Right Side of the Chart. Have a great day.